Welcome to Tax Insights, presented by Hawkins Ash CPAs.
Good morning, listeners, and welcome back to Tax Insight here on WOMT 1240 AM, 107.9 FM, and online anytime at WMTradio.com. We're talking with Jeff from Hawkins Ash. Jeff, good morning, sir.
Good morning, Terry.
Hey, we're talking about the IRS bank monitoring here on today's program.
We are, because one of the things that's being discussed in Washington right now is to have banks report to the IRS anytime that a person has a transaction in their bank account over $600. Now, this would be a new requirement for the banks, but what many people don't know is that the banks already have to do required reporting to the IRS, and this would just be expansion of those kind of programs.
So it looks like they have backtracked on this and changed that dollar amount, correct?
They did, at least at this point. So everything is still in flux. But now they're looking at banks reporting only transactions that are cumulatively over $10,000. But this is still going to include a lot of people.
Absolutely. So are there exemptions for the banks?
So that's what they're trying to sell to people, is the exemptions. And yeah, there are. So those exemptions are, exempting from reporting this income that's received through a paycheck that has federal withholding, or maybe federal benefits or Social Security. But if you really think about it, the IRS already has this information. So even though the banks don't have to report it to them, they still have it because they know what's on the W-2s, and they know how much people are getting in federal benefits and Social Security because they're the ones that pay it.
So what do you think the IRS is really trying to accomplish here? I mean, if we break this down.
Yeah, there's a lot of people that run small businesses that are cash businesses. And some of that income, or, who knows, maybe a lot of that income is not reported to the IRS. And what the IRS is saying is that they're really trying to ensnare wealthy taxpayers who aren't reporting their fair share. But at the end of the day, I think it's really to entice these cash businesses to start reporting their income. Now, they'll never say that because it's very unpopular.
Absolutely. So once they get this information, how exactly is the IRS going to use it?
I think the plan is to look at how much income is reported on a person's tax return and compare that to how much actually goes in and out of their bank accounts and look for big differences. Now, the IRS already does this on audits. When the IRS starts an audit, they normally want to add up all the deposits that went into a taxpayer's bank account, and they compare that to what was reported on the return. If there's differences that, between the two amounts, the IRS asks the taxpayer to explain it at the start of the audit.
But these differences can be significantly different, right?
Oh, they can. So let's say that someone does a lot of traveling, gets reimbursed from their employer for expenses. This could be thousands of dollars per month, and it's not taxable income, so it shows up in their bank account, but it's not reported on their income tax return. Or let's say somebody gets a gift from a family member or sells a car or something else to a third party. All of these transactions are going to put cash in their account, but doesn't show up on the tax return.
So, Jeff, in your opinion, what do you think is going to end up happening here?
So the way Washington is going, I really have no idea. But if you really pushed me, I would say that if your cash deposits and spending is higher than your income, then you will be a target to the IRS for either an IRS letter or an audit at some point. Now, some of these letters and audits might be legit because of these cash businesses that aren't reporting their income, but some won't be. And I think for those that are not legitimate, like let's just say, legitimate audits, I should say, like people receiving gifts or selling assets or reimbursements, legitimate things that would make your bank account higher than your tax return, they're just going to have to realize that they're always going to be in a higher risk for audit under a program like this.
Right. So before we go, Jeff, how would the IRS police this since they don't have really enough auditors right now?
Well, the spending bill that they're talking about in Washington right now hopes to include about $80 billion to the IRS in the next 10 years to hire more people and hire more auditors.
Jeff, great information each and every week here on the program. How do listeners connect with the team at Hawkins Ash?
You can go to our website, which is hawkinsash.cpa.
Awesome, Jeff. Thank you for your time. We'll talk to you next week here on WOMT.
This has been Tax Insights, presented by Hawkins Ash CPAs. Learn more online at hawkinsashcpas.com. Hawkins Ash CPAs. Part of your business, part of your life.